It is a great feeling when you're building your own business. And as a business owner, you look forward to the day that you open the door to your business. However, there are several questions. What annual sales should you target? What sales and admin expenses can you afford? What are their respective growth rates? And should it be debt or equity investment? And most important question is that of value. How can you grow the value of your business? At Calgary Smart, we have built an Excel sheet to answer this very question about value. We called it the Small Business Quick Valuation Model. So let's have a look at this Excel sheet. So this is the Small Business Quick Valuation Model Excel sheet. And the first thing that you can change is the start year for the business. So it can be 2017 or 2018, for example. And then you can change the projected sales for product A. So let's say this is $60,000 with a growth rate of 15% and the cost of goods sold of, let's say, 20%. And you can also update the other sales of product B. As for the sales expenses, this can be a formula. So let's say if we have the sum of the sales of product A and B multiplied by 10%. So you can enter it as a formula there. And it also has a growth rate. As for the general and administrative expenses, you can update it directly and have a growth rate for this one. You also have to estimate the capital assumptions for the equity investment that your business would require and the cost of equity that it comes with, as well as the loan period. And the maximum that we've built this Excel sheet is for 7 years. You can also see how the other parameters can change the value of the business, such as changing the cash conversion cycle days. So if the accounts receivable drops from 60 to 30, then the value of the business would increase. Similarly, if the inventory days decreases from 120 to, let's say, 60 days, the value of the business also increases, but somewhat slightly. Whereas if you increase the account payable days, the value of the business would increase. And you can also update the small business tax rate that you expected and see how that changes the value of the business. At the same time, you can see the projected income statement as well as the balance sheet and the cash flow statements. We also have projected debt table and credit analysis of the business. Now, the credit analysis of the business uses the Altman Z-score, which gives the level of confidence of financial stability of the business. The valuation projection would give you the free cash flow to the firm as well as the free cash flow to the equity part. And the ratio analysis gives other profitability and liquidity ratios that you may need. So this has been the Small Business Quick Valuation Model overview. And on the first sheet, we have the welcome page where we just give you brief instructions as well as the link to this video. Thank you for your kind attention for this video and hope you find this small business valuation model useful, and you can download it for free using the link that we have provided for you.